Good morning, ladies and gentlemen. Good morning, traders. Welcome to this live trading webinar. For those who join us for first time, my name is Theo, and I will be your host for today and for the rest of the webinars. So I hope everyone will have a great time. Good morning, guys. Good morning. Welcome. A lot of messages I see here today. That's fantastic on Zoom. That's perfect. Hello. All right, so as you can see, this is the risk warning disclaimer, and you can read it. So let's move on. At this stage, I would like to share the website and navigate you through there. Guys, first, please make sure you follow us on the Instagram page, as we put a lot of stories, reels, comments on every single day. So please make sure you follow us here. You can also comment on the post, on the reels. Everything is related to trading, right? Also, we do have the Admirals Telegram channel. It's starting to become a brilliant communication channel for traders based on the feedbacks I got recently. And people, they say that due to the fact they are allowed to comment on the post, it's give them a great engagement, and many people, they said they would like to use it. So please, if you have anything about trading on the post we put, just feel free to post it there. And the last one, of course, the YouTube channel. Here is your link as well. As I said many times, the whole team and myself, we put enormous amount of effort to bring up this content to you directly, and it's a lot of preparation in order to deliver in 30 minutes whatever I would like to deliver. So please make sure you like the videos we do here. Definitely you subscribe and you enable your notification button so you receive all the videos we upload. And if you guys scroll down a bit and you go to the trading spotlight, you will see here all the recording videos, the webinars we do. And yesterday, for those who haven't had the chance to participate, to join me on the webinar I've done, I make a detailed explanation about trading plan for 2023, how can we make our trading plan, where our main focus has to be. And it's going to be a great webinar to watch for those who already had that interaction about this subject with me before I think it was on the 29th of December. We've done that, but I go in more detail, so please make sure you watch the webinar. The team will upload it today, so if you enable your notification buttons, you will receive the notification when the webinar will be uploaded. Now, in terms of something I would like you to engage with your trading, is a weekly trading podcast. You can find it here on our website under the analytics weekly trading podcast. And why to do that? So when I'm talking now to the traders, they join us today for first time. Guys, when you have the basic understanding of how the markets, which events markets can anticipate, and what the possible outcomes can be played. And based on my extensive knowledge, on a daily basis, I interact with the markets. I can just give you a brief idea of what to do expect if something is really crucial. So very few people, they just played it directly from the website. Most of you guys, as I know, and you know, you just download it from the podcast sources. So however it's you think it's better for you. Now, economic calendar. Today we have the ADP employment change in the US. As many of you know, it's an indication of what we can see in the next next Friday, the upcoming Friday, for the non-farm payroll event. The first Friday of every month, of every calendar month, it's the non-farm payroll event. So NFP it's something that creates a lot of volatility in the market. Traders, they focus too much on this event. What we have today expected, except of the inflation rate in France, we have also the ADP. I don't know why this calendar doesn't show it here, but the ADP event, it's like it's telling us pretty much what can we see on the non-farm payroll. Based on my experience, again, as a trader, especially lately, these events, they are not very, this event, it's not very accurate, the numbers for the outcome of the non-farm payroll. So I don't give too much weight on that. Let's have a look at the morning briefing headlines. Today's headlines, what's hot in terms of news. Let's start. Federal Reserve, FDIC, and OCC warn banks about cryptocurrency risk. And there is a text here if you like to read it later. Contraction in US factory sector depended in December. EU set to impose coordinated controls on travelers from China. Russia basic errors jeopardize its Ukraine forces, military analysts say. Twitter says it plans to expand political ads it allows. Okay. Tesla stock fall 12%, posting worst drop in over 2 years. Microsoft workers to form company's first union in the US. And Apple's market cap slides below 2 trillion for the first time since 2021. Let's go to the MT5 platform. Guys, please let me know any trades you currently hold or you are thinking to trade. If you have any currency pairs you would like to see, please put it on the chat below. We'll start with the indices, of course. Dollar index, the first one. Hello, Mr. Darshan. HNY. So yesterday we talked about this support here, and we said that this can create the move to the upside. However, because the trend is down, we are not in a rush to buy. We said this consolidation pattern here, the descending triangle, put yesterday this bullish engulfing candle to the upside. So let me change something here. So this bullish engulfing now is retracing about 50% back. Again, I'm not that in a rush to buy this, ladies and gentlemen, for the reason that the major trend is down, everything is down, only this price action is to the upside. I would like to buy if we're going to have a higher high. So I want 2 closes higher than this area here. And then I'm keen to wait for the retracement, and then I will enter on the Euro USD, on the Pound USD, Aussie USD, and so on. We will see that a bit later. Okay, but again, now we used to trade dollar to the downside since this event here. Okay, and we were trading up to somewhere here on the 50% fib retracement, we said. But after that, the market went in a consolidation transition period. And it's at this time that I understand when we open the screen, when we open our charting platform, and the first instrument we start is the dollar, our brain has a tendency to want to look for trading opportunities today here. And unfortunately, this lead many traders to the misunderstanding of the information they appears in front of them. And what do I mean by that? It's been, let's say, since the middle of December that the market, it's just moving in a consolidation mode here in the dollar index. So we have 7 majors. We have the euro against the dollar. We have the pound against the dollar, the Australian dollar against the dollar, and the New Zealand against the dollar. Then we have the dollar. When I say dollar, I mean US dollar. Then we have the US dollar against the Canadian, US dollar against the Japanese yen, and US dollar against the Swiss franc. So we have 7 major currency pairs. But if the US dollar shows this consolidation mode, then most likely we will experience frustration if we start from the majors and going down and down and trying to understand what's going on, why I don't find an opportunity, where is the opportunity. All right, so be mindful with that. Usually when the majors, they just don't give any move. Anyhow, a currency all the time, it's going to be stronger or weaker than the other currencies. So we can find some cross pairs to trade and not necessarily the majors. All right. So let's move on. The DAX 40, we are retesting this area of support, broken support, now can act as resistance. Anyhow, we said that we had this support in the market. Yesterday, we didn't break above, but today we can have the move to the upside. Now, there are traders at this point that they see this lower low and they wait for the price to come here. They have limit orders, sell limit orders, and they expect the price to keep declining. Now, this one here, if we go on the weekly chart, we can see better picture of this market. And if we start from, let's say, the beginning of the year, we see that we are in a downtrend. Then we zoom in and we see this near-term trend that it make the move to the upside. However, I believe every trader can understand that we are in this consolidation area. So we touched the resistance and the market sold off. So the market, it moves in wavy patterns, okay? But remember, we saw the dollar index. The dollar, most of the dollar index affects the move of the indices, the majority of the indices. Okay, so when the dollar index is pushing lower, the indices has the tendency to push higher. So for the DAX, today on the daily chart, it doesn't seem to give us some trading opportunities, but from the intraday, if we go to the 1 hour chart, we can see some sort of pattern, like a flag pattern here. It has bullish implications. If we see the break, then on the 1 hour chart, we can project and we can see some more advance. USD yen, okay, we'll have a USD yen has lost its, it hit 152 last year and now it is dropping towards 129. After the sell-off, AUD can regain its high, yes. However, pound, euro, New Zealand are still a long way off. Yes, very, very good analysis, Darshan, well done. FTSE 100, we came at this area yesterday and we didn't manage to push higher. Again, I mentioned about the liquidity yesterday, and I said that from today onwards, the market will start trading back in the normal market conditions. And then we have the Dow Jones. Nasdaq and the S&P 500, all the three averages, they just sold off yesterday because of the strength the US dollar showed. Yep. What do we expect if we take it day by day cases? Today, we are still below this support, this resistance, sorry. Now, again, if the dollar is going to push to the downside, it means that this move, it's going to lead towards advancing prices. Okay. Do we have a clear picture to trade this one here? Well, the clearest picture is to follow the patterns, right? But on the daily chart, it looks a bit messy, but if we go on the weekly chart, we understand that this has more bearish implication rather than bullish implication. I hope it's understandable by everyone because the price, it just declines. Price action here sold off from the resistance. Now we are in this retracement mode, and I personally do expect it. Let's go back on the daily chart. I personally do expect it to see some push to the downside. What I'm really waiting for is if I could get a price about 50% or 61.8% fib retracement, that will be much better. Someone requests kindly put currency watermark on your chart. I don't know if I can put this on the MetaTrader platform. Guys, does anyone knows if I can put water trademark on the MT5 platform or on the MT4? Please let me know. I know I can do it on the TradingView platform, but we don't use TradingView yet. Then we have Euro USD double top. Yes, it is Euro USD double top. And we will see it in a second when we go to the charts there. All right, so Euro, that's the pound USD. That's the weekly chart. The daily chart, it's, as we said, it broke below this trend line. So we would like to see some more continuation to the downside. However, if the dollar index is going to push to the downside, then the pound, it's not going to be the ideal to trade it to the downside, because if the US dollar is going to get weakened and the pound is going to get weakened, then why to trade the pound to the downside? We can find a strong currency pair to trade it to the upside. Let's have a look at the euro against the US dollar. And here we have a double top. We have a nice double top, although it didn't touch, as I said yesterday, this high here, but we saw that sell-off. This was the swing and it had been broken now. And here is the thing. This move, it's still in an uptrending environment. So if we are in an uptrending mode, let's just get rid of this one. If we are in this uptrending channel, then when do we start selling? Well, first we have to go and check the big picture. And the big picture says, it shows that we are pretty much more bearish on the weekly chart. So if the price, it's gonna create this lower low and lower high formation, then we can start looking for short plays, right? So for price action traders, the 4-hour chart maybe gives some more clarity. If you use fib retracement from here to there, let's see if we have some match. The 61.8 Fib retracement, as you guys see, can match better with everything else. And maybe that will be a good area of sell. Okay, so we're going to keep an eye on this area here. But if we're going to go for sell today, it means we bet that the US dollar is going to get stronger. And we have to understand that here we are also in this upward trending move. All right, so the risk has to be a little bit careful. We have to put our risk with consciousness. Okay, we don't just blindly open the trade. Now, on the USD CHF, that's the pair, USD Swiss franc. Isaac said, yes, you can by installing Supreme Edition. I do have the Supreme Edition. Okay, I will check it for tomorrow then. So against the Swiss franc, the US dollar, it found that resistance here. It sold off yesterday. So we are waiting to see some clarity. And again, in general, if this pattern that broke the structure, so we were trading into this downward move, okay, and we have this, let's say, descending triangle. This small pattern here, it broke its structure. So we go to the next available pattern that is on the higher prices. So if this, it's going to break to the downside, definitely we're going to come and we're going to put some limit orders here, sell limit orders to get us to the downside in the first pullback. If this is not going to break to the downside and it's going to consolidate, well, we don't do anything within this consolidation, because not only it's a very low probability trade, but we don't know how the dollar or the Swiss franc, they will react and where they're going to create the breakout. Okay, we want to see the breakout, ideally to the downside, or even if we see it to the upside, we will wait. We identify that buyers, they're going to be in control. We're going to wait for that retracement. And somewhere here, most of the times, the buyers, they come to defend their areas. We're going to put some pending orders to get filled if the price is going to come there. Australian dollar against the US dollar. Australian dollar looks performing really well today since the Asian session. We can see some continuation to the upside, and as Australian dollar performs so well, with any weakness in the US dollar, this will be the ideal candidate to trade to the upside, and not the pound against the dollar. You see the difference? The pound, it already broke its structure and create lower low, but the Australian dollar, it didn't create a lower low. It stayed within this consolidation. So it has more support from buyers and it's just pushing upwards. Do you guys understand the difference? And today it looks like that the Australian dollar, if we're going to stay above this area on the 15-minute chart or on the 1-hour chart, it looks like any pullback can be utilized for longs here. Kiwi, again, same. We broke the structure here, but it looks like that this is more bearish rather than bullish. So in order to start buying, we need to have this higher high, higher low in place. USD against the Canadian dollar, very mixed picture here. USD against the Japanese yen. Yesterday, we came at this support area. So if we're going to see some weakness, more weakness in the dollar, and we definitely, the yen, it's still super strong. We definitely want to see some move to the downside. Now, if you can see some other Japanese yen pairs, all the Japanese yen pairs, like the Australian dollar, the euro dollar, the Australian yen, the euro yen, the pound yen, all of them, they had bearish close. They were selling off yesterday. The only one didn't sold off, it was the US dollar against the yen. And that's not because the yen was weak, but it's because the US dollar was strong. We saw it on the dollar chart. So what can we expect is, if US dollar is going to be strong, then we know that the Japanese yen is also strong. Why to try and trade the US dollar against the yen to the downside? We don't need to. We can go to the euro against the yen, the pound against the yen. Anyhow, we see the Australian dollar, it shows some strength among the other currencies. So we don't even need to look at the Australian dollar to sell it against the yen. But the euro shows weakness and the pound shows weakness. The CHF also against the Japanese yen showed weakness. The Canadian dollar, it's really weak also. Here is the pound. Canadian dollar against the yen, it's very weak. So you can have a look. You can keep an eye on all these Japanese yen pairs still today, guys, because it looks like they can give us more opportunities as well. The gold. Let's have a look at the gold. Yesterday, gold was trading higher and higher and higher. And today, it's still pushing to the upside. So we said yesterday that the next level, basically not yesterday, after we broke above this zone here, and especially we matched it with the USD weakness, we said that we can see the gold retesting all these levels here. Okay, so it was a good opportunities. I don't know if you could manage to get into some trades, but if you did it, it's perfect. Now pound against the Australian dollar, it's down definitely. And gas still trading lower highs, lower lows. We are approaching this level of support, still room for the price to sell off. If we find some intraday opportunities, why not? How do you deal with drawdowns, multiple losses in a short period of time? It's when you have multiple losses in a short period of time, the first thing you do is to review your trades. Why do you have multiple losses in short period of time? Do you change your strategy? Do you trade randomly? Do you flip between time frames that you haven't traded before? That's the first question. The second question, do you change your risk managed parameters? Do you risk more or do you risk less? And the third question you're going to ask yourself, when you answer all these questions, you're going to find the root of, let's say, the problem. And the third question is, do you interact with your trades while they are open? Do you close trades because you're scared to lose some of the profits? And do you open trades because you're scared to not to miss out? Or do you close? Do you interact with your stop loss and you move your stop loss up and down just to give trade more room to move and all this stuff? Now, if all these 10 answers are no, 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 and you just have, and if your reward to risk, as I say many times, your reward to risk is greater than 1-to-1, it's 2-to-1 or 3-to-1 ideally, your reward to risk, then it's nothing wrong. I took 7 losses in a row lately. I'm don't have any issue with that because my reward to risk is 3-1. So even 7 losses in a row, 2 winners, they gain back all the losing trades, because that's the thing with trading. Okay, but if you go with 1-1, I said many times, you must by Darshan, thank you so much for joining us. If you go with 1-1 only, you must have a strategy that at the least has 55% winning ratio, so you can be at break even. Ideally, you want 60% winning ratio and 40% losing ratio in your trades. Otherwise, it's not going to be, you can't be ahead of the game. But with the 3-2-1 I'm using, my strategy gives 35 to 40% only winners, and I'm still happy because I make money out of trading. All right, it doesn't need to be right all the time. So we don't need to be right all the time in trading. Like, let me give you an example, guys, here. If I go on the USD JPY, let's have a look at the USD JPY again. Sorry, let me find it. Oh my God, where is that? USD yen. If I go on the USD yen and I say that I will place right here we are. Let me walk you through. Let's say that I acknowledge this strong level of support, but all the trends are down. I don't have any sign that there is an uptrend either on the weekly or nowhere. But if I say to myself that, you know what, I believe that this support, it will hold. Guys, listen to that. If I say I believe that this support will hold, and what I can do here, I can just simply, and how I do the price action trading, for those who've been a while here and you know, I use my Fib retracement and I measure where is the 50% of this long tail, lower tail candle, or this hammer candle, if you like it. And where it's the 50%, I place a limit order, buy limit order, and I place my stop below the low of this candle. Why I do that? Because I want to get into I want to get filled at a better price, and it gives me better reward to risk. So what do? I place, if I place right now a buy market order here, right? I open a trade buy, and I put my stop loss. Let's say, what is this distance here? Let's just measure it. It's here, 60 pip. The whole, that one was 100, so 60, about 100 pip, 100 pips stop loss from here to there. And I go for 300 pips. Ideally, it has to be here. That's 400 pips. But if I go only to 300 pips, it means 3-1. So I open a trade here. I have my stop loss there, SL, and I have the take profit, the profit target, PT. I have the profit target here. Now, if this trade will lose, I'm totally fine with that because I have a 3-1 reward to risk. I don't mind. Okay, but is it a high probability trade? Not much. So if you are doing something consistently on one time frame and you don't flip left and right and interact with the trading so much while the traders are open, and why traders, they interact with the trade while traders are open? Because they scare either not to lose money from the account, so they close early, or they scared if they are in profit not to lose profits. So it's always the fear of loss, always. And they start interact with their trades, and they don't let the trades to play out. So what's the end result of that is we never going to experience trade in a way that allow us to make consistent profits. That's all. Let's read some more questions. Dasha, okay, man. I thought that you had to go, man. Planned limit orders can save you from entering at market for fear of missing out. That's great. Thanks for sharing. A disciplined price area entry prevents you from entering at a bad price. That's very, very, very accurate. Nice. Thank you for the answer. After drawdowns came multiple losses. Scared to take a trade. There is as well the revenge trading factor, which could make the situation worse. So, Karim, I would like to definitely suggest you open either a demo account and you start trading there for a while until you feel better, or you reduce your lot size. If you are trading with, let's say, 1%, go to 0.25% or 0.1% or 0.5%, whatever makes you feel calm to open the trade. But at no way you said to yourself, I will stop trading for 2 weeks or 1 month until I regain confidence. No, confidence will come with action. And what I always say, please reduce the trade size as much as possible to still take trades, and the confidence will come back. Okay. Gold is up, Aussie is up. Yes, rumor. Shani, can we buy gold here? Yes, we can buy, Shani, but the problem is where the stop loss will be. We want the stop loss to be at the place where, if you're going to buy here, where you're going to put your stop loss in order to make at least 2 to 1 until the price is going to reach the resistance. The only way to do it is if we go to the lower time frames. But now the move is over. Do you see? The move is already over. We have to wait for the move to come back a little bit and then to enter again long. Can you trade non-farm payroll with us? To me, I don't have any sessions to trade non-farm payrolls live, guys. Honestly, for now, it's the only session I do. It's those live trading in the morning, which plays, but with Jens, you're going to have the opportunity to talk about fundamental trading, if that's fulfill your needs, which place is good for Tesla long. Look, when it comes to buy stocks, if you're going to buy it and invest on them just to keep them in your portfolio here at Admirals portfolio, if you have an account, you can just, now it's a great time. It's already sold off, in my opinion, without saying that as an advice, financial or personal advice. I believe that it's a good time because it's selling off nicely. It's melting down. But if you're going to buy it for on CFD with leverage, then definitely we're going to apply technical analysis. So you go to if you are intraday, the stocks, usually we intraday on the 5-minute or 3-minute, 10-minute chart, because the stock market is only open and been acting volatile for only 5 to 6 hours. So we need to apply technical analysis and find these turning points. The lower highs become higher highs. We wait for our pullback and we buy, and that's it. So, guys, I think that's all from me today. It was again a privilege and honor to host this webinar for you. I hope you find some value. Please make sure you like the YouTube videos, you subscribe on the YouTube channel as well. If you have any questions, you can use the Telegram to communicate. And I wish you happy trading, and I will see you all tomorrow at the same time. Thank you so much. Bye-bye.